Hello, everyone, and welcome to the latest edition of the Sharesify podcast. I'm joined, as usual, by my good friends and colleagues in Conway and James Crux. So, hello, chaps.
How are we doing?
Good afternoon, Steve.
So it's been a busy old week on the markets. There's been quite a lot going on, isn't there? I guess the market mood is really still being dominated by this big question mark about AI and will it eat software? But there's been lots of volatility around as well, Ian. I mean, you've got some thoughts on that.
Well, we talked about it on Wednesday, didn't we, Steve? I mean, one thing I've noticed this week is the US market, it opens up each day and then closes down. You know, it kind of starts okay and then everybody starts talking about AI again. Someone described it on Bloomberg TV as like a heat-seeking missile, which I think is a great call. It is basically testing out the bull case. It's going around sector by sector testing out the bull case. And what did we have yesterday? We had Apple down 5%, worst day since Liberation Day, because people are worried about the availability of chips for it, for example. Asian tech stocks are now getting sold off. They seem to be a bit immune for it. What are people doing instead? They're sort of clustering around really big, boring stuff. So, James, Walmart, all-time high on numbers yesterday.
Absolutely, yeah.
Yeah,
and recently become $1 trillion company, didn't it?
And recently become $1 trillion company. I mean, part of the irony of this AI argument is that, we're all so excited about it. Now, it's either going to wreck business models and jobs, on a huge level, or it's a massive waste of money.
But I think there is a point to be drawn here in that certainly the narrative at the moment is very much about we're scared, we don't know what the outcomes are, so we're selling everything because we're just worried about the what the outcomes might be. But ultimately, lots of analysts are coming out and saying there's been far too much selling in some of these companies. There's lots of companies with their own data, which is what it's going to be feedstock for AI business models. So I think you're starting to see some bounce back and some pushback from the kind of sell first and ask questions later. And so we've seen companies like Relx come back. We've seen the LSE share price come back to some degree as well. So I think we are going to see a pushback against this kind of overriding, we're scared, we're going to sell everything first and then worry about it later as more information becomes available. But I mean, we have to remember it's such an early stage for the AI theme. And so inevitably there's going to be lots of questions to be asked and precious few answers at this point.
Yeah, absolutely.
I mean, you can see the nervousness though. It's infecting markets. I mean, the FTSE it's up a little bit this week, but not very much. The S&P is down 1.4%. The Nasdaq down 1.9%. You can see that the market mood is still very much in this kind of risk-off mentality, which kind of brings us on to, what are people looking for? It's not necessarily small caps, because small caps in the indexes haven't really bounced back either. But you wrote a good piece about bonds, Ian, and it might be that people are shuffling to the safe havens of gold and bonds.
I think it's it always was an important part of portfolios until recently. There used to be a thing called the 60-40 allocation policy, where you allocated 60% to equities, 40% to bonds, to give you some stability and some income through the cycle. And I'm not saying 60-40 is necessarily the way to go, but I do think if people haven't thought about bonds, now is probably quite a good time to be thinking about them. And so we put an explainer up, a guide to what bonds are, how they work, how you get paid, what the levels of differing levels of risk, because you've obviously got government bonds that are least risky, you've got corporate bonds, some of which are not that risky, some of which can be very risky. So there's always, as always, it's do your own homework on these things.
Yeah, absolutely.
But we've also put in a few suggestions of funds and trusts that people might want to look at. Some of the most popular trusts, funds of last year, according to TrustNet, and some of the better performing investment trusts, according to the AIC. So that's up on the education section of the website.
Yeah. I mean, it's a great segue from the AIC and Trustnet into another major talking point this week, which has been this emerging bicker fest between the AIC and Saba, who are trying to reshape several investment trusts. James, I know you've been all over this story. What are your views?
Yeah, so the gloves are off there. The AIC is urging the FCA and the Department for Trade and Business and Trade to get a grip with Saba, after it's this sort of relentless attacks on Edinburgh Worldwide. So it's sort of back for a third time to try and oust the board and put its own directors in. And shareholders have backed the incumbent board and management team sort of more than once now. So perhaps the AIC does have a very good point. Perhaps there should be a limit on the number of times the same shareholder can come back with the sort of similar proposals. I don't know what you think about that, Ian.
I tend to agree, James, to be honest with you. It's taking up a lot of management time, a lot of the board's time. It's not helpful for the managers themselves to, they want to be concentrating on the job at hand, which is picking good stocks and managing their assets. It's a huge distraction.
Indeed.
Yeah, and absolutely, and it does seem to be a relatively small pool of investment trusts that they've really focused on. So one wonders whether there's behind the scenes axes to grind from Saba. I mean, we don't have any news on that, but it's something certainly to keep an eye on. And I do think that distraction factor on management, they're trying to run an investment trust and having to bat this back constantly, it does raise some serious questions, doesn't it?
Absolutely. We've got another strategic review with European Opportunities Trust has launched the review. So they're thinking of either a merger, returning cash, or maybe even rolling into an open-ended fund a la Smithson. So that's another situation to keep an eye on. Yeah, that's the Alexander Darwall Trust. Sentiment towards that one never really recovered after he kept backing Wirecard, which is a kind of German payments firm that blew up.
Oh, crikey,
Yeah.
Well, I mean, we've had some other strong news. I mean, we're talking about the sort of softness in the software side of the AI sector sort of sphere, but the infrastructure side still seems to be holding up pretty well. And we've had very strong results this week from Datadog, very strong results from Vertiv, all around sort of cloud infrastructure. But we had very soft results from Cisco, or rather soft reaction. Investors took umbrage at their margins, and ultimately they're just being pressured by these capacity issues. So there's not enough memory chips to go around, so prices inevitably go up. Supply goes down, prices go up. So they're being hit to some degree on having to pay higher prices for memory chips. One presumes that will work itself out as more capacity comes on stream. We're looking ahead to next week as well. So I mean, there's some quite interesting stocks to look forward to. You're talking about defence and the BAE in particular, Ian.
Yeah, BAE and Chemring next week, Steve. This is an area which doesn't seem to have been sought out by the heat-seeking missile of AI, actually, funnily enough. But I a lot of investors long BAE for sure. So I can't see any issues with that one next week. One which is on my radar is IHG, because that's an all-time high. And you do wonder about US tourism.
This is Intercontinental Hotels Group.
Apologies for the abbreviation there. Intercontinental Hotels. The vast majority of its business is in the States, and you do wonder about US tourism when you hear Disney saying that they lowered their expectations for foreign visitors to their theme parks and so on. So keeping an eye on that one, for sure.
Yeah, it's also going to be a very heavy metal week as well, isn't it? Because we've got a whole bunch of miners, FTSE 100 miners, Antofagasta, Glencore, Rio Tinto, and Anglo American. Now, in light of the sort of record or near record prices for gold, for silver, for copper, and for other metals, it'd be really interesting to hear what they're saying in terms of demand and supply, whether much of this is coming from industrial expansion in places like China or the US. So I mean, there's lots of little read-throughs here, isn't there? Economic read-throughs, also risk on, risk off read-throughs. So it will be a fascinating space to watch.
Yeah, absolutely. If I can just go back, we were talking about events of the week, and I think the UK, you've got to look at this Schroders deal, which is a 200-year-old firm that's battered off so many approaches in the past, and now agreed a deal with Nuveen in the US. Now, most people won't have heard of Nuveen. It's actually bigger than Schroders, and together the two of them will have $2.5 trillion of assets under management. But I'm unhappy. The CEO Richard Oldfield, the trust, the owner, the family trust, they've all kind of went, okay, £6.12, including the divvy. That's great. That's a 34% premium. I'm amazed that they think that that's a fair price, because it's trading at a real low at point of the cycle at the moment. And this is a company that's compounded earnings by about 10% a year over the last 30 plus years. It's to me far too cheap. It shouldn't be £6. It should be closer to £12. So I think they've absolutely stolen it.
I mean, it'd be a shame to lose. You mentioned, I mean, more than 2 centuries of independence. It's been listed since the late 50s. And again, it's another company that will leave the FTSE 100. And this, the US firms in particular have been cherry picking the best UK assets for several years now. FTSE 100 and FTSE 250 companies. It just seems that the UK is just unable to keep hold of its better companies.
Yeah, but what irks me is that they've absolutely stolen this at £6. I really do think this business is worth a great deal more than that. I find it very interesting, as we were talking earlier in the week about Elliott Management increasing their stake in LSEG. Again, this is a business which has compound earnings at double digits, and it's just at a low, the valuation's at a low point in the cycle. These things mean revert. They go up and down. They don't stay where they are for very long. And I think that they've picked a very good moment to start rattling the cage at LSE Group.
Is it a done deal, or are there any sort of prospective other bidders?
It's rather than the bid, they've just increased their stake, James. And what I think they're trying to do is they want them to sweat the assets a bit harder and get higher returns.
Okay.
Yeah, I mean, it goes back to that previous conversation we've had on the podcast about what it might want the LSE to do in terms of splitting the stock market operations outside of its data business. And this is something that several fund managers have been calling for the company to do as well. So, I mean, that's something certainly we should be keeping an eye on over the coming weeks and months.
We will.
James, are you looking for towards anything in particular coming out next week?
Not necessarily next week, but I did sort of note the frosty reception to Magnum Ice Cream's debut results yesterday.
Very good.
Right.
Yeah. Volume growth not too great, sort of 1% and a bit. Profits were down, but a lot of that was to do with separation costs. So, I suppose the question is, were Unilever right to demerge? So that will sort of evolve in time, I guess. But one to keep an eye on.
Yeah, took a licking at the moment though.
Very good. Want to roll here?
Okay, chaps. I think that's probably about a wrap for this edition of the podcast. If you want to get in touch, listeners, please drop us a line at editorial@sharesify.com. And also, don't forget to, if you're watching us via the YouTube channel, give our subscriber link a click. So until next time, enjoy your weekend. Cheerio.
Speak to you soon.